Rick Santelli standing by at the CME. Rick, take it away.
Yes, on the GDP, of course, this is our third time around the block. The current level at 2.3, well, that would be the best since the previous quarter when it was 3.1. And if you look at the next week, that'll be the first quarter of 24, which was 1.6. We move up a tenth to 2.4. So 2.4 is our final read. And 1 month from now, we'll get the first look at first quarter GDP. If we look at consumption, it moved down a couple of tenths from 4.2 to 4%. And on the pricing indices, on the main price index, 2.3. We lose 1/10 from 2.4. If you look at the PCE price index, that's a quarter over quarter. And, of course, we know at the end of the week we're going to get more PCE data. 2.6, it drops a tenth as well from 2.7. Now, let's look at what we have on initial claims. 224,000. That's 1,000 less than a slightly revised 225,000, right in line. The best way to look at this number is the last time we were over 250,000 was basically around Halloween of last year when it was 260,000. And the lowest reads that we've had recently are hovering right around 208 and 203. Those were in January of this year. And finally, if we go to continuing claims, 1,856,000. That's about 20, 30,000 less than expected, actually. In the rearview mirror, a slight revision from 1.892 to 1.881. Maybe the best way to understand this number is last time it was 1.9 million. That was the second week of January of 25, and that comps back to November of 21 when you start getting readings over that. Now, advanced trade, we know that this number is a lofty number. This particular series on the trade balance came out in 1989. And, of course, the current number is minus 147.9 billion. That's a new all-time record. We pretty much seem to be going record to record. However, last month now at minus 155 does still claim the biggest deficit. This month a bit lower, minus 147. Those are scary numbers. And we could always debate as to whether these trade balances are a good thing, bad thing. Does it put money in the U.S.? Does it help purchase treasuries? Does it get recycled? There's a lot of ways to look at that number. Inventories. Boy, what a heightened awareness of inventories. And I'm sure Steve Leisman will touch on this, because the inventory game goes right along with the tariff game. Everybody's armchair and what's going on. But we did get some big jumps. Now, let's look at retail inventories. They were up 0.1%. And the big news in retail inventories is they finished last year at minus 0.5%. That was the first major turnover to the downside since May of 21. And it hasn't been all that responsive. Where we are getting the big moves is in wholesale inventories. Now, it's up 0.3, but our last look in January was up 0.8. That was the biggest wholesale jump since the summer of 22. And that's what many, of course, are going to focus on. Is this getting ahead of the tariffs? Is this going to be a hiccup if the tariffs prove to be somehow not as bad as we anticipate? Last I looked, Gain, I had 2023 data. Imports on goods and services as a percentage of GDP is probably in the 13 to 14.5% range, just to kind of put a face on it. Interest rates are moving down on this data, but moving down on this data still puts a 10-year at 4.37, which isn't all that much lower if you consider where we were a couple of weeks ago. Back to Joe and Becky.